Hi, my name's Alex. I'm a sales trader here at CMC Markets Singapore, and today I want to take a look at the post-Trump dollar rally. So we're looking here at the US dollar index. And this here corresponds to election day, when the results started coming in on the 9th of November local time. We're looking at the front month futures. We can see that it rallied from around about those 96 levels all the way up to multi-year highs. So we hit sort of 14-year highs around here, and we've pulled back from those levels very slightly, but at around about 101 we're still looking at a pretty strong dollar. So the market has rallied on the speculation that the Trump administration is going to bring looser fiscal policy, specifically financial deregulation in the form of the repeal of the Dodd-Frank Act, higher infrastructure spending, and of course Trump has also talked about lower taxes. The combination of these policies is seen as spurring growth, boosting inflation, and ultimately pushing up interest rates. So I want to ask you if that rally is sustainable. What sort of levels might we expect? And one popular trade has been the dollar yen. So with the prospect of divergent monetary policies, could this rally carry on going? And if so, where is it likely to go? Again, with the dollar yen here, if we pull up a chart, so we look over the last 2 months, this level here corresponds to election day, November the 9th. As the results started coming in and it became probable that Trump was going to win, we saw panic selling. Dollar yen sold off from around about the 105 levels all the way down to the 101 before reversing and rallying ever since, all the way up to where we are now at round number support come resistance 114. So there's just a few numbers I'd like to introduce first. So I'm going to go to a slightly wider time frame. And one key level has been the parity, the 100 level. So if we just have a look at that on the chart, let's just put that in. We can see this has provided support a number of times. So we've bounced off 100 in July, again in August, and once more in September. Now, if we go out onto a much wider time frame and have a look at some macro trends, we get a couple of interesting numbers that are thrown up. So I'd just like to have a look at the Fibonacci price extensions here, and we'll just draw in. So we have a strong long-term trend here, all the way up to sort of May 2015 peaks here around 125, 125 and a half, before a consistent downtrend until we bounce off the 100 levels. So this provides us with some pretty interesting numbers. If the rally has still got legs, where could it go? We can see that we've already gone through one resistance level here at around about 112, 113. That would bring the next target into line at around about this sort of 119, 120 sort of level. And if we break through there, then this 125 looks like a real possibility, and then even possibly 130. What's interesting about the 125 level is not only does it correspond to this 50% level, if we have a look at the chart, this also corresponds to our May highs. So we might find this 125, 125 and a half level is ultimately the peak. However, it could still potentially go further. There are a couple of important caveats to consider as to whether this rally is sustainable, however. One is, will Trump make good on his word? We've seen him during the campaign flip-flop back and forth on issues. And we know that already since he's been elected, he's rode back on a number of his more extreme sound bites. Now, this could be taken by the market as a good thing, that he'll keep his central tenets of loose fiscal policy, higher infrastructure spending and lower taxes, and row back on some of the more extreme stuff. But it also means there's a cloud of uncertainty surrounding his presidency as to exactly what policies he will enact. So I think that's one caveat that needs to be considered when we're looking at these levels. The second one is that the market has only been looking at what it sees as very dollar positive policies. Now, there's a complex interplay of other policies that he's talked about throughout his campaign. And one thing he's made very clear, for example, is that he will withdraw from the TPP as soon as he takes office. So he certainly seems to be anti-trade and protectionist. We've already talked about 45% tariffs on Chinese imports and the possibility of trade wars. Now, it's not clear what effect this is going to have on the dollar, and clearly could be dollar negative. The final thing to consider as well is global shocks beyond the US. For example, a banking meltdown in Europe. We might see a lot of safe haven plays, which could see a lot of yen buying, driving dollar yen down. So these are a few things I hope that are worth considering when you are trading dollar yen, and I hope this has been of some assistance. Thank you for watching. Goodbye.